Good morning, traders and investors. Happy March. It is the start of a new month here, a new trading month. Any March birthdays out there, happy March birthday coming to you. We, of course, have a lot to talk about over the weekend and the war trade. We're going to give you a breakdown on news happening over the weekend related to the war, and then we're going to dig into a lot of trading ideas, the war playbook, the title of the show here. It's not something that we love to have to trade on when there's things like this happening in the world, geopolitical issues, but of course there are opportunities and things we have to think about. So we have a lot of ideas here. Money Mitch and I running pre-market prep here this morning. We're going to go through a whole couple handfuls of trading ideas, the obvious plays, the less obvious plays, some contrarian thoughts here for you. But we should frame what's going on here this week in Wall Street, folks. Remember what the focus was the last week, the last 2 weeks, 3 weeks ago. It was the software and the AI disruption played. So we just want to, note that here, and we are going to touch on that a little bit. Couple earnings here this morning and over the weekend, including Norwegian Cruise and Berkshire. We're also going to give you a little preview for earnings coming up here this week and a couple other events. Our guest at 8:35 a.m. You know him, you love him. Tim Quast from Market Structure Edge and Modern IR. Folks, let's get into pre-market prep here on March 2nd.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Folks, these charts are brought to you by TradeStation, born to trade, chart analyze, customize, all in one platform. Let's go around the horn here, folks, and see how stocks are responding this morning to what's been happening over the weekend. SPY trading down 1% here. Let's check the Qs real quick. Qs trading down 1.33% or so. IWM, the small cap, and the Russell trading down also 1.33%. Here's the big one to focus on when it comes to the war trade. Of course, crude oil, USO, trading up 7% here. Let's do a quick run around for gold. Gold also moving as the market moving lower, up 2.5%. See what silver's doing. Silver this morning trading up 1%. And let's just do Bitcoin real quick here. We'll do the IBIT like we like to do. IBIT, Bitcoin trading up about 1.5% or 2% or so. Folks, hope everyone's having a good day here. Let's bring in Money Mitch, see how he's doing over this weekend. Money Mitch!
Let the red come in. What's going on, guys? How we doing out there? It's good to see you guys. And yeah, you see what happens? Money Mitch comes on the show. Brent looking good. We got the jackets on. We're ready for the week, man. And it's going to be an exciting week, to say the least, right? Exciting because there's trading opportunities to be made, right? And that's what I'm super excited, because I've been kind of really digging deep into agentic AI on the weekend and getting really deep into building. This is exciting times overall. Especially our trading careers, guys, because if you guys aren't using AI or really kind of digging deep to build right now, I think you're doing it wrong. So just a little bit as a side note, I think everybody out there should be in building mode right now, using AI to try to help yourself build so that you can be on the front edge of technology, not on the back end, right? You don't want to be those people that wait the technology takes over and then you're worried about that. So that's on a different tone, of course, than the market right now.
Of course,
the market being taken over with war talk. But I just wanted to mention that if you're building out there, for all those builders, keep pushing.
Well, appreciate the words of wisdom, some of the knowledge there, Money Mitch, and we're going to get you a lot more thoughts here. And let's get kicked off with the weekend war news. On Saturday, we heard that the Iranian Supreme Leader Khamenei was killed. The report was initially from the U.S., from Donald Trump, saying that operations were led, strikes were had, and they did kill Khamenei. The Iranian state media did not confirm right away. They were denying it, saying that he was still leading the battlefield. Basically, a few hours later, I want to say like 6 or 7 hours later, after we started hearing reports within the U.S., the Iranian state TV did come out and say that Khamenei was killed. There was retaliation from Iran in Israel, including Jerusalem, UAE, Qatar, Kuwait, U.S. military bases within the region. On the home front here, there is protests on both sides, polarized protests here. There are sides saying, there's a side saying, you know, quote, a free Iran is what we want here. There are sides saying that they don't want anything to do with any war in the Middle East. We had protests in the U.S. and globally. We did hear President Trump give a timeline of 4 weeks or less for some kind of conflict in the Middle East with Iran. You know, whatever that timeline means here, we hope it's, I guess, you know, we hope it's less timeline here than that, but we'll see. Triple D was long LMT and Northrop Grumman going into the weekend. So a great call there that we had in STN over the weekend heading into this trade. Dennis has reported that he has sold his positions, his longs in Lockheed Martin and Northrop Grumman. And he's even now shorting RTX because, little quote that he dropped us, the war dips are usually bought in like the overall market. So keep that in mind. Mitch, let's get into some of our plays here. And I'll go around, I'll pull up the charts here and we can just kind of go around and look at, of course, oil. Oil has been the most sensitive proxy for this trade, this war that's happening. And this is something that I was saying last week. If you want to watch exactly what's going on with the war trade, I would suggest having a chart of crude oil or USO up. This has been the thing that has moved first, even before the defense names like the Lockheed Martins or the Northrop Grummans of the world's. Palantir, also, of course, a play here for defense. And of course, we've had the drone names, AV, ONDS, KTOS. I'll just pull up an AV here real quick. Airlines and cruise liners, also kind of a bit of an obvious play here on the heels of oil. Look at AV here trading up about 10% this morning. And then on the other side of this, these are names that are, you know, responding higher for the most part. On the other side of this, let's keep in mind that staples and healthcare names are holding up here. And something else that we like to watch in moments like this, volatile moments, volatile weekends like this, is the VIX and the VXX. And Mitch, you know, if I'm saying you should have a chart of crude oil as a proxy for any news that might be coming out of the Middle East or out of U.S. defense, is VIX something that you would keep a chart up and kind of like watch all the time actively throughout the day while we have things like this happening in the background?
Yeah, especially as you start to get further and further into uncertainty, one of the things you want to be watching is kind of like VIX contracts, right? The contracts and the put ratio, right? So you can look deeper into that information, look at open interest, things like that in the option markets. That's why even if you're an equities trader like myself, right, that just trades purely stock, I don't necessarily trade options.
Yeah,
I kind of have to understand that game there
totally.
so that I can take a look at it in moments like this. And of
Right.
course, one of the highest things that you want to focus on is as the VIX rises, there's a correlation, right, to the overall market, right? And as the VIX rises, the uncertainty goes higher, volatility increases, and majority of the times we see even areas that are uncorrelated to the market start to be correlated with the market as that uncertainty rises.
Yeah.
So right now, I don't think it's the fear that everything gets like the takedown, but I think it's something to watch to see if we get further expansion of course, the VIX or the VXX this week. And if that happens, then we could possibly see that maybe even a turn on value and trades like that. So
Sure.
something definitely to keep your eyes on this week.
And Mitch, you were saying something smart to me just, before the show started. You were like, as we have these geopolitical moments and the VIX starts rising, pulling up the VIX there, but if the VXX there, but if we look at the actual VIX, it's around 23 and a half or so right now, spiked to around 25 this morning. When you have these moments of more volatility, it becomes less of a stock picker's market. There's more volatility out there. People are kind of just watching the macro tape more, and your individual names, believe it or not, are a little less sensitive to some of this stuff.
Yeah, you got to just keep an eye on it. And right now, we were in kind of that stock pickers environment. We're going to see if that environment shifts, right? So that's one thing to keep in mind. Let's keep making it move over to maybe some of the less obvious plays that you can maybe be looking at, right? Because these are kind of your obvious plays. Everyone knows what's going to be right off the back up and right off the back down. But there's some plays that maybe you're not thinking about, right? So we'll quickly run through some of these ideas. And of course, you guys can take a look at some of these trades. First up, what about the tankers? Right. Of course, they're going to have some issues here with traffic pausing or reroutes. The biggest thing that we can look to see is how do the day rates get impacted? Right. You'll hear a lot of shipping conversations getting pulled from this. Right. So this, of course, can magnify the squeeze. Names to look at in crude tankers. You can look at a DHT or a TNK, maybe an INSW. Right. Some of these are less liquid than others. So keep that in mind. That's one thing that our preference is. But definitely these could be trades that can continue seeing upside because of the issues that will now present themselves over the coming weeks, right? So I don't want to only be thinking about trades that can be impacted just today on a pop. I want to think about trades that could continuously move up in the next coming weeks. So another area that you could look at is product tankers. Then you're looking at names like STNG, which is Scorpio Tankers. I like the name there. And then TRMD, right? And of course, these are lower liquidity names, but just to give you guys outside thinking, right? And another area that you could be looking at is US-centric E&Ps, right? If we're going to be in this environment where if global crude prices are higher, then domestic producers, not dependent on that strait, can get a clean tailwind. Right. So there's a bunch of names that you can be looking at in the EMP space. Some of the bigger ones, of course, that have recently made breakouts are ConocoPhillips, your CNQ, you got Oxy, EOG, and then even a recent chart that I was looking at technically, which is FANG, Diamondback Energy. This one hasn't run as much as the other names. And I would say to continue to watch for different trade ideas in oil that are just starting to make breakouts over, let's say, long-term trend lines and just waking up versus the names that have made huge runs already on the year, like, let's say, an XOM, right? That's a little bit too far gone for me to be chasing up here 34, 35% year to date.
Yeah, of course.
So I would definitely keep that premium in mind when you're looking at these oil side plays.
All right. And then what about we should also probably have some of like the liquefied natural gas, the LNG names too, right? Like one you gave us before was, of course, like a LNG. This is more like an exporter. But then there's also a couple shipping natural gas plays, Mitch. I don't think you just mentioned them in there.
Yeah, we can talk about that with FLNG. This one's an interesting one. Also has a long-term trendline break. Just recently broke above the kind of the hold of that 25 on a throwback look. So you broke 26, you came back, you held that 25 pullback. Now you're driving up there towards 29 and 30s and starting to take back out weekly levels. With a situation like this is the perfect catalyst for a technical run, right? So when we have combination of catalysts, and I always talk about combining variables in your trade thinking, right? You want to see things that are making technical breakouts that have story now behind it because of the war, and also have fundamentals. So I start diving deep. Are the fundamentals improving in this company? And then you take a look at sector and industry. It's perfect timing for this to run. Now we'll see how much run we actually get in these names.
Sure.
And overall, natural gas can really be kind of expanded, if there's more situations also with Qatar, right? So keep that
Yeah.
mentality and looking to see what happens in that expansion, because we did hear about conversations that they're really upset and they're thinking about attacking because they got attacked, and so things like that. I think you continue to watch to see what happens in LNG.
And all of this, surrounds around the Strait of Hormuz, right? Connecting
Yep.
over there and into the Middle East. One of the major channels where the major channel where both oil and natural gas are coming out of the Middle East. Something that you were talking about last week that I just want to touch on here real quick, Mitch, coal.
Yeah. Coal, I think, is an important one, right? If we're going to see this kind of lift in energy, coal often trades, of course, off power markets and natural gas, but global energy squeezes can still, of course, light it up. So I was looking at these trades last week to see if they'd
Yeah.
start to get going. This type of catalyst could be the one that kickstarts it right back in the direction. So a name like BTU, of course, Peabody stands out to me. I'll also be
Yeah.
looking to see some momentum traders in coal like METC. Of
Yep.
course, as your Aramco resource. One of the interesting parts about this stock is that it reported last week on earnings, right? And it took a hit, right? So now that kind of lowers the bar here with the catalyst coming back in. It could reignite the interest in the stock. So, of course, what I will be looking at is that gap right above it on the daily that comes into play around 1625s today. So if I can see a move towards like 17, that can get me excited that the coal trade is starting to really kick off. And then we can kind of play the backs of this, right? So looking for stocks that we can play more on tailwinds of this event than stocks that are just jumping up and gapping today. Because as you can see
Yeah.
in like a Lockheed Martin today, you're
Yep.
already seeing what? The declining action coming in. One of the things we were talking about last night clearly on STN room was, hey, guys, watch out for the turnaround right at the open, right? Because these could be quick gaps up because the premium has already been ignited in these names before, right? These names have already been up 40% on the year, 30% on the year. So that when they get this premium and high bar because of this catalyst, they're jumping higher, but they're really extended. So this is easy
Mhm.
ways of having that kind of drift back. Now, could they buy the dip? Yes, you got to be looking to see what happens here. So what I'd be using is pretty much like Friday's close, kind of drawing some fibs, thinking that mentality and the 50% retracement around the 686 level. That's kind of where you can see a little bit of support. It already held this morning. I'll be watching around that level to see if it holds, but we could see further leak in these names. And what I'm really watching for, and we talked a little bit about it before you kind of kicked off the show, Brent, is looking to see what happens with all this war conversation. And then the other huge conversation that we should be having, right? Which is
Yeah.
software and financial markets on Friday really taking the hit right back down. Right. So
It's
I think that's
still
where we kind of have to pivot to,
Yes,
because
it's still
this
out
this
there.
conversation's still present. And some people are thinking, will this shake, right? This focus on war, will that start to cause more inflation scares that could drive further the tech trade to a turnaround, to a downturn, right? And so those are the things that I'd be kind of keeping an eye on, especially when we think the financial markets, because we saw big hits in asset management, big hit in credit services last week. So one of the things that I'm calling for and looking for right out the action is, will we see some kind of bearish capitulation in software and the financials today? Will we get some
Okay.
opening action where it's just a quick whoosh down, trying to wash out the bulls that have been loading in last week, and then start to see this trade start to
Mhm.
turn? We all
Mhm.
know how a lot of times the market loves to buy war, right? It likes to go up on war. So I think that this could be the day where, yes, we did get a little bit of a hit in the SPY down overnight. Now we could see maybe a little bit of some washing out the open, and then I'll look for big buying to kind of step back in. So especially after the
Okay.
first hour of the day,
Okay.
I'd be looking to see what happens to the tape. Do we see a flip? Where do we see bids, and then all of a sudden in the afternoon we start seeing offers lifting, right?
Mhm.
So keep the eyes on that trade. That could be a big trade to look for, especially if you're looking to say, hey, This whole thing creates further scare in software, further scare in the financial markets,
Whoa.
and we're looking to see the impact right at the open.
And what do you know? The tech industry is still out there amid this war happening in the Middle East. We did have breaking news here right at 8 a.m. I'm going to pull up the chart. Lumentum, LITE. Thanks in the chat for pointing this one out a little bit earlier. Shares of Light here trading up about 8%. The company, actually Nvidia and the company Lumentum issuing a press release. Nvidia announces a strategic partnership with Lumentum to develop state-of-the-art optics technology. It's a non-exclusive deal, which includes an Nvidia multi-billion-dollar purchase commitment and further capacity access rights for advanced laser components. In addition, Nvidia is investing $2 billion in Lumentum to support R&D, future capacity, and operations as the company builds out its US-based manufacturing capabilities in a new fab. Of course, this is getting Lumentum moving here this morning as it is the player, but we know that there are a few other optical names in the space.
Yeah.
Let's just take a little run around here, like a Sienna is one I like to look at here. Is Sienna getting a bit of a lift here on the heels of this? A little bit. Do you have
Yeah, I
any
got some
other
here.
do you have any other optical names, Mitch, that you like to look at?
Coherent, I think, is the company. It's COHR. I'm
Yep.
not sure if I'm pronouncing the
No,
company
yeah, you
right,
said
but
it. Yeah, Coherent. Yep.
Coherent here is industrial datacom lasers. So you can look into this one. Another one, AAOI, right?
Applied Optoelectronics. That's a good one. Yep.
So you can look at that one. It's already getting the lift here. You can see it kind of hitting there and getting the nice
Yep.
offer there. And then there's some other plays that you can take a look into, which is more your silicon photonics. So then now you're looking into your GFS.
Okay.
Your
Is
global
that's like
foundries.
foundries? Yep, sure.
Yep. And then you got more Intel, a part of that trade, your Cisco, a part of that trade. So this is an actual area in AI trade that has been getting hot. Why? Because it's more of your hardware, right? Mentions Dennis mentioning in the chat there too. This is your hardware behind AI trade, right? This is the trade that can continue. If there's one trade that can continue in the AI trade, it's the infrastructure and, like I talk them, right? The thing behind the thing, the picks and shovels. This is the things that are needed to build out these huge data centers and these big AIs. So these aren't going away. We know that the CapEx is there. We know that the industrial stocks are moving higher. Why? A lot of these have to do with that picks and shovel play in AI. So continue to look to see that this is a trade that doesn't move away. And this is why the eyes are not going towards the actual tech names, but more the hardware and everything that's needed for these data centers to come alive.
Yep, absolutely. And you touched on it pretty nicely a little bit ago, Mitch, but I want to just circle this back around here and just to mention it, I don't know if we've necessarily mentioned it, but the IGV has been the proxy for the software trade. Just kind of take a look at the chart here real quick. It is same thing, like I suggested, like, okay, if you want to be hypersensitive on the war trade today and this week, watch your oil chart or USO. Of course, if you want to be hypersensitive on the AI disruption software play, IGV has been your play. Anything sensitive in as far as that story goes, the IGV ETF here has been moving right away on this stuff.
Yeah, you got your GLW, just to mention another optics play. There's tons of plays there that I think you can watch. It really expands deep. But it's an area that I've been hearing multiple traders that focus on theme, like I do myself, start to mention optics AI. So, one of the things that we'll do, hey, like always, we have start swing trade STN. We'll dive deep into optics AI tonight. So you want some more names? STN's the room.
What time do you do that, Mitch, by the way?
7:30 p.m. to 8:30 on the
7:30
nighttime.
Yeah.
Into the daily charts, as I like to talk about it. And what do we focus on? Sector and industry rotation, so that we keep up with the trends and don't miss the trades, right? A lot of traders talk about how they missed the big trade. Well, how do you not miss big trades? Keep up with the trends. Sector and industry rotation is how you catch the big boys positioned in and see that stock start to lift. So another thing, of course, to watch to see is what happens to staples and healthcare here, Brent, because I think that's a trade that I really want to
Yeah.
watch, especially the healthcare trade. We all know how consumer staples have been hot, right? That's kind of more, does the hot trade turn, right? But one of the trades that could get hot here, and it was already starting to do a nice little breakout on Friday, was the XLV trade.
Okay.
So we could pull that chart up and we can
Yeah,
take a
sure.
look into that. We saw a nice little rip on the XLV to 160.40 on Friday after a nice little pullback day on Thursday where we had gotten above a trend line look. Now, I think what has changed? Why did we get that lift off on Friday? Well, if you quickly look into what has been dragging healthcare is the anchor. There's usually an anchor in a sector that could be holding it back. The anchor here, healthcare plans, your UNH, right? Your Alliance Health. Those types of names have been holding down the action. Now, if you take a look at like a UNH recently, it started to pick back up. And there's a huge gap above it for it to kind of get into that gap zone. And I'm saying here, and I've been talking about the XLV for a while now, is if we could start to see this anchor lift a little bit, this could really kind of drive the boat to see the XLV go higher, right? So,
Sure.
of course, we also have some catalysts that are coming in this week. Just to mention, there's a conference this week, right, in healthcare.
A couple.
So
Yep.
I think that's something to look at because you're going to get more news flow to come out of this.
Mhm.
And so, like I'm saying, just keep your eyes on those healthcare plans as long as they can't act like anchors just holding down the sector anymore. That alone, even just sideways action here, will give it the ability to start looking for further drive. So the XLV is definitely a trade that we can look at, especially if we see an up market this week, right? A lot of people are thinking, well, war should bring down the market. Majority of the times, and it's crazy to think it, but war doesn't necessarily bring the market down. It's usually a shock wave that comes in first.
There you go. Yep.
Shock wave.
Yep.
And then the uncertainty actually gets cleaner, right? We go towards more certainty in the market because now it's not if we're going to attack Iran, it's we're already are, and when does this end?
Yep. And
Right?
circling back to something that Triple D was passing us earlier, he said, a lot of times the war dips get bought. So keep that in mind. Just real quick, I want to go to a couple earnings plays here before we get our guest Tim Quast in a little bit. But just sticking on the healthcare and the staples theme for a sec, in kind of contrast to this war trade. Do you just use like the XLP, Mitch, to track staples, or do you look at a specific stock?
Yeah, I want to look at the XLP overall, right? Because what we
Cool.
need to see is in this case, and I've been using the 9 EMA, and it's okay if you don't have it on that chart, but just think about it like that, right? You want to use a short-term moving average and see if this can keep holding on the short-term moving average, whether yours is the 9, the 10, the 12, wherever it may be,
Okay.
right? It should hold that because you're on what's called the momentum breakout, right? And you want to see the ETF still show momentums, get bought on pullbacks. So in this case, the XLP, a clean break above 90 this week could be that next driver in this that can push it to the next drive. Similar to the chart that we saw on specifically January 30th. If you look at the chart and you literally scroll in on that date, look how these two charts look very similar. So you want to be seeing that it goes back through the resistance, breaks through, and goes on a nice clean run to the next layer, right?
And just something I want to ask you about real quick. You said the, quote, short-term moving averages. 12 is about the limit of your short term. You wouldn't use like the 20. That's
The
too
20, you're going into kind of your medium.
cool. Yep,
So you're
exactly.
going into
Exactly
that
what I was
medium,
asking.
and those are bigger pullbacks. So some
Yep.
people use the 20 and the 50 at that level, right?
Sure.
I
Got it.
use the 50, but like I always say, technical analysis isn't about being exact, guys. It's about being descriptive and using those moving averages to know that it's in a momentum breakout, right? It's not trading off of it necessarily. It's more using that to understand the momentum in the stock.
Sure. Okay, I want to move to earnings here real quick and talk
Let's kick it.
about a bad day to report earnings. Norwegian Cruise here reporting this morning. Company reporting a mixed quarter. They beat on the bottom line, 28 cents versus a 26-cent estimate. Sales on the top line did miss, and they also cut guidance. And you guys and gals know something that I like to do is look at very short-term charts to see exactly when a news item might have started impacting in a stock. And Norwegian Cruise's earnings, this is how little, people care about, the market's caring about this earnings report, and just clumping this into the war trade. The earnings hit right at 6:30. Let me see if I can zoom in here a little bit on my chart. The earnings hit right at 6:30. And the stock was obviously already down with oil moving higher here.
Yeah.
So right around 6:30, you can't even tell that the earnings hit. So just wanted to mention it here real quick that they did report, the oil trade and the war trade is not the only thing here to focus on. But another quick earnings report, just wanted to get to. Berkshire reported over the weekend. Why don't we just look at Berkshire A? That's kind of fun. Berkshire here this weekend reporting a mixed quarter. They were worse than expected for the bottom line. 473 was the earnings versus a 520 estimate. And actually sales also missed about 95 billion in sales. Analysts were up closer to like 103 billion. I don't know. Any comments on Berkshire or Norwegian here, Money Mitch?
Yeah, Norwegian, I'll make the quick comment of just continue to look to see what happens with their activist investor pressure. Of course, Elliott Management recently disclosed a greater than 10% stake there, and I would continue to watch to see how that pushes for strategic changes. And of course, oil demand is going to affect them, but what's also affecting them is just rising cost overall. So that's what was included in their guidance, weaker demand and cost pressures that are affecting the business. Of course, if we go looking at Burke, the interesting part in that area is the net income coming down. Of course, this was the final quarter for Warren Buffett, so I think we start. Yeah, it's a turning of the page, right?
Turning of the page, right?
I think Warren should, it was time for Warren to turn that page, right?
Sure.
So I think now we start to take a look to see what happens and what are the decisions that Greg Abel does, right, as he takes care of this now. And one of the things that are slowly happening is they have an insane amount of cash, right?
How are they going to put it to use? Greg Abel is no longer new guy. We were calling poor Greg Abel. Guy's probably awesome. We were calling him new guy for a while, but he's no longer new guy. He's Greg Abel. He's the head.
Taking over.
He's taken over. He has taken over. It's official.
Now, one thing that you want to be kind of keeping an eye on is there was, and the reason why the net income was down, there was an Occidental Petroleum write-down. So Berkshire took a 4.5 billion non-cash impairment. Of course, this has to do with kind of their accounting and the way they go about it. It doesn't mean that they sold off a whole bunch of Oxy. So don't go running with that information, right? This has to do with more accounting and how they do their services, right? So I don't think it's anything to be alarmed on. If anything, it's more to see what are the next purchases. That's going to be the biggest scrutinized look as we move forward, because of course no one will be able to say, oh, this is the Warren pick now. This will now be a Greg pick.
Yep. All right, let's do a real quick preview here for earnings this week. Michael Feehan making us a very nice earnings calendar. Thank you, Michael Feehan, for putting this together. As you can see, of course, we had the Norwegian this morning. That's the one that we mentioned. After the close today, I'm just going to run through a few of these. We'll just give a few highlights. And Money Mitch, stop me if there's a stock that you like especially want to comment on operation-wise, or if you want to just take a look at the chart real quick. After the close today, BBAI, MongoDB, that's going to be, definitely on the AI disruption software ground zero name here. We get a Credo after the close, CRDO, and a name that I know some in the SDN room have liked watching, the Archer Aviation, ACHR. And then we're also getting AST Space Mobile after the close today, ticker ASTS. Tomorrow before the open, you wanna pick one on there?
Maybe
Mitch,
just don't forget maybe like Asana, right? Software
Asana tonight.
Big concern. You want to keep looking at those software names to hear comments of flattening or business model changes.
The word flattening,
right? Keywords,
reorganization.
Guys. Looking for things like that will really help you in these earnings.
Good stuff.
Then
Mitch.
Tuesday, of course, you get Target. I'm going to be watching to see what happens in Target. You guys know how I feel about Target. I think it's one of the best bets for this year as a big turn stock. that, a lot of people hated, and now it's turning, right? I don't trade stocks because they're hated. I trade stocks because they make me money. So I think Target is definitely one of these names that could make you money this year. I'll continue to watch to see what happens with their earnings.
We
And then later in the week, we get big boys, right? Wednesday afternoon, AVGO will be a big stock to look at, right? That's going to be massive, important for the market overall. And there's some retail names that come in throughout this week.
Yeah. Yep.
ANF.
Yep.
You get your kind of your retail names on tomorrow. So keep your eyes on to see what happens with retail, because some of the people are thinking that if we do go into that consumer slowdown, that's one of the areas that could give us some insights in the earnings as we move forward this week.
Yeah, we of course get into towards the end of the earnings season, we get into the retail earnings season when we get these names like the ANFs, the Targets, the Best Buys. You could even clump an AutoZone in there. American Eagle on Wednesday after the close, ticker AEO. Burlington Thursday morning, BURL. BJ's Thursday morning. Costco Thursday after the close here. Marvell also Marvell's probably like one of our highlights here for this week, especially in Techland. I think on Thursday a lot of people are going to be focused on Marvell, MRVL after the close. We do have Tim Quast in the background, Money Mitch. I think he's just getting set up here. He says give him 1 sec. Money Mitch, if you got a jet, that's cool, man. I appreciate you jumping on here for pre-market prep this morning.
Yeah, I'll go ahead and I'll hop. I'll be continuing to watch to see what happens. I also want to continue to watch the XLU and independent power producers. That's what trade that most people might not be watching today that could just take off again, right? One of the things that I heard from Trump throughout the weekend, other than the war, was that he told tech companies to bring your own power again. He keeps bringing the term, right? I always talk about terms. We talk about the flattening in software. Well, one of the terms we will hear consistently throughout the year is bring your own power. Those are independent power producers. That's your IPP stocks. Don't get those off the radar, because if Trump's going to keep talking about it, investors' eyes will keep going towards that.
Sure.
Hope you guys have a good time and keep taking a look into learning more in the STN room. I know you guys do a great job in the afternoon trade. I was watching and tuning in on you guys in the afternoon Friday. I heard all about the war trade and how this could be a good trade for the weekend, because the weekend gives you more of those days and that opportunity for that volatility to expand. And shout out to you guys. You guys nailed the trade. Dennis, good trading action. Wish you guys the best of luck.
Thanks, Money Mitch. Have a good day, brother.
See you guys.
All right, we are going to get Tim Quast here in just a sec. He was making sure his mic was working. I want to just give a real quick heads up for a couple other things that we got going on here this week that I want you to have on your radar. Of course, we talked about the two main pieces of focus, the war trade and the AI disruption trade still remaining. But also this week, we are getting at least one nodal piece of econ data. And then Money Mitch mentioned the healthcare event that we're having this week. Just keep your eyes there, as we could get some developments out of that. But also, we get the Morgan Stanley Tech Media Telecom Conference. This is probably, I think this is basically like the JP Morgan Healthcare Conference for the tech media telecom space. This is happening tomorrow through the 6th. What is the 6th? Is the 6th Thursday or Friday? 6 is Friday. So Morgan Stanley Tech Media Telecom Conference, the 3rd to the 6th. Also, we have the Mobile World Congress happening in Barcelona this week. Because it is happening in Barcelona, it is a little bit earlier for U.S. players. This is starting today, and it's going to be running till Thursday. And we're going to go into some of these trade ideas here in STN today and tomorrow, folks, for the Morgan Stanley Tech Media Telecom Conference, and also the Mobile World Congress. Leading up to Friday, folks, on the econ front, we are going to be getting our monthly jobs report from the Bureau of Labor Statistics Friday at 8:30 a.m. Let's go grab Tim Quast and see how his weekend was. Tim literally just lost Tim. If you can hear me, Tim, right before the intro was going to come on, we lost you. Try to disconnect if you can hear me, Tim, and come back one more time. Tim says, let me swap devices. Okay, sounds good, Tim. All good, all good. Give us one sec here, folks, while we do get Tim Quast. Market Structure Edge, Modern IR, one of our favorite guests to have on Pre-Market Prep and in the STN room. He sometimes joins us in the STN room around 10 a.m. or so. After Tim, folks, we're going to get to rating the ratings brought to you by The Fly. I'll give you a couple teases here, folks, while we're still waiting for Tim Quast. We did get Alibaba, BAB, added to Goldman Sachs conviction buy list. We also got CrowdStrike CRWD upgraded to overweight at Piper Jeffrey. And this one was for Money Mitch, but Money Mitch had to take off. Bros, Dutch Brothers getting upgrade over at Goldman Sachs. After we chat with Tim for a little while here, we'll take a little sneak peek into The Fly and we can get some color from some of these calls here. Just a little teaser if y'all want to hang out another 15 minutes or so, we can get into some of these rating changes and why the analysts were making some changes here to start this week. Give it a sec here for Tim Quast to join. He said he was swapping devices. Let's give Tim a sec here. He should be back with us in just a sec. Adrenaline, appreciate the nice compliment there for Tim. A fantastic asset. I agree. Triple D in the background here, kicking us with some notable opening imbalances. Imbalances are an important part of STN room, folks, especially when we're getting ready for the open STN show from around 9, 10, 9:20 or so. We are looking at opening imbalances, getting us set up here, and then also heading into the close. I actually like tracking the imbalances into the close around 345 or 350 or so. These can be important potential trading opportunities, folks. Triple D, thanks for sharing a few of the notable opening imbalances that you're seeing. Dennis saying that XYZ standing out. Block, of course, with about a 650,000 share sell imbalance. Bank of America, about 160,000 share sell imbalance. ExxonMobil, XOM, 300,000 shares on the buy side, along with Chevron, 160,000 shares on the buy side. Tim, can you hear me? He's smiling. He's giving thumbs up. Let's go. Let's go to Tim. Run that intro, Brenston. Tim Quast, good morning. How you doing?
Nice to see you, Brent. Hey, sorry about that. It's
All
not
good.
flattering. I had to swap to my Microsoft Surface, so I'm peering down at you.
Oh,
apologies.
well,
hey, it's working. Good to see you. Happy
good
Monday.
to see you too. The sound is good, and the camera. You look good.
Oh, thank you. Well, I don't look good. You know, at my age, that's not even achievable anymore. But at least we can see each other.
How was your weekend, Tim? I heard you you maybe got a little. Did you go riding? Did you go skiing?
No, well, I got one day in, and it was like as a friend of mine described it, skiing through bags of cement. It was
oh no, that does not sound nice.
It was work, but hey, we'll take any snow we can get. It was a good workout. It's been so warm up here, Brent. It's like it's like mud season in the mountains already. So we're already shifting our attention to our hopes and prayers for a wet green spring and summer, because we're going to need it. We just didn't get the snow this season.
I'm with you. I hear you. Okay, so Tim, get us set up for how you're positioning this week. Obviously, we have a ton of news over the weekend. I'll just throw it up here to you. What do you focus on starting this week?
Right. You know, when you and I were trading notes about topics, which was on Friday, and we had at that point had no idea that
oh my gosh,
that we'd be at war with Iran, and Nvidia would be trading at 175. So certainly those things change the outcome. You could could take the easy answer and say you should go long defense and energy and short travel stocks, but everybody's already done that. All the
There you go.
machines have done that. So,
Yep,
you know,
exactly.
if you're trying to figure out how to navigate this market in the midst of these things, that's the question I think that we have to answer. And you know, what do you know? I can tell you a whole bunch about the market in February that is somewhat anomalous. So, and I'll rattle these off, and they will shape how I think about what we might do.
Okay.
So, if you look at February from a volatility standpoint, it was the most volatile month since April of 2025, and of course, that was the Liberation Day trade. Volatility in April was 4% in the stocks comprising the S&P 500. And what I mean by that is the spread between the intraday highs and lows. And that's very challenging then if you're a trader. You know, how do you know you've got your entries and exits right when you have a lot of volatility? So in February, we averaged 3.3% volatility. We topped 4% several times. We actually had more days of 3% volatility in February than we did in April. So that's one thing. Number two, we like to look at trade size. So you can look at it two ways. You can look at what we call dollars per trade, which is how much money changes hands with each trade. So for a way to think about this, SPY trades about 1.1 million times a day, and it's, you know, give or take $17,000 a trade. So when trades, and then number of shares, call it 70. So if you have 70 million trades of 70 shares, call it $17,000 a trade. That's a lot of activity, and it makes it very difficult to set your trade up effectively. And how do you know you're going to produce a return? So it's why we say don't trade price, trade demand and supply imbalances. But when historically those two things have converged, that is, when the trade size shrinks and the amount of trading activity rises over a long period of history, those have marked declines in the market. It happened in 2020, March of 2020, happened in January of 2022, happened in April of 2025, and we have the very same conditions in February. Yet the market didn't decline. It's a real outlier.
Resilient.
And you can say, well, why is that? Well, I don't know that I have a good answer. It could be because of the pervasive use of 0 days to expiration options. I think those shift attention in the market away from the central purpose of investing toward what is my hedging strategy. I won't complicate it too much. So against that backdrop, it's difficult. I personally have volatility in short trades right now because we're at this inflection point. When you shift from 1 month to the next, month-end options expire. That happened on Friday. Generally speaking, when you get into a new month, there will be the deployment of institutional funds. We call it new month, new money. You know, all of us who are contributing to our 401ks, retirement plans, that money flows to investment managers and it gets deployed. Will that happen here? Oh yeah, we'll see how the day goes. I don't know the answer. But here's how I would. So with that as the background, here's what I would say. I'm going to share my desktop if I can do it.
Let's see. And like, I love what you're pointing out here, Tim, because like, we don't always need to know the answers, but we should have awareness, you know, and that's what I think you're doing. You're drawing awareness to it and saying like, well, we don't have the answer here, but at least we have it on our radar.
Yeah, exactly. It's difficult. We have now gone, in fact, here, I'll show you this. We have gone the longest time since we have been measuring data this way without a broad sentiment dip below that green line that you see on your screen, this right here. So if one were to look at this over a long period of time, I'm going to refresh it. This is, so the green part of the graph that doesn't change a whole lot, that's an algorithm that we call demand or market structure sentiment. And it's predicated on consuming trade execution data and looking at different purposes and time horizons affecting those trade executions and normalizing it to a 10-point scale. So the more time that the market spends over 5, and over the long run, it averages about 5.4. More money comes in than leaves. The market has a propensity to rise. When it dips below, and the thing that's dipping below that green, that's the price. So that's over here. So you've got the price of SPY, and you've got demand. And all across this period of time, which ranges from the end of November to present, just a default view, you can see that demand at no point is close back here, is below that green line. So if you expand out to a year, the last time that the market dropped below that green line from a demand perspective was here, was it at the Liberation Day trade.
Sure.
And so this is the longest time in the entire data set without a break below that green line. And why does that matter? Well, in a normal, well-functioning market, you will have routine periods where you have an entry point. And a drop below the green line tends to be an entry point. The market does better. It will also mark the ends of cycles. If I expand out a little bit further, let's do 5 years. You can see this develop. So if we went back to, let's call it the end of 2021. So right here, December of 2021, we have this booming market, and then we had a breakdown below the green line. And what happened? Well, we had a bear market, and the bear market ended the same way that it began, with breakdowns below that green line. So you could see the same thing happen here in 2024. We saw the same thing happen in July, August of 2024. There was a very volatile period. We had this period in December of 2024 where we broke down below the green line. That was the precursor. We could know there was a high probability that the market would drop. And then we had the end of that cycle. So now we're in this cycle with no end. At some point it will happen. And I can't predict when. I can only tell you that this period of time now is longer than any other period in the entire data set without one of those. And so from a probability standpoint, I would expect one, right? It's a matter of math. And, no one can do a good job of predicting tops and bottoms. I saw Dennis, was trading notes with Larry Tabb on X about this, that it's very difficult to predict a top. And so we could consume a lot of energy and time as investors trying to figure that out, or you try to keep the probabilities stacked in your favor. And so how I do that, and what do I know? I do know market structure. That's the one thing that we know a lot about is the mechanics and behaviors of the market. So here's what I tend to do. Around options expirations each month, I will have volatility trades because it's been a very predictable thing to do. You can see it. Each of these points where there are little green squares, that's monthly expirations. We've had very volatile conditions. I tend to be long the market when broad sentiment bottoms. See that green when it starts rising. It's not always the right thing to do. And I tend to be short it when it tops. And here's where I have put my volatility trade on. So that doesn't help you from an individual stock standpoint, but it helps you know that the market moves in predictable cycles and it has near-term tops and bottoms, and you can use those for more predictable volatility trades. That's how I think about it. If you want to think about what stocks to trade, I'm going to go back to what continues to be one of my favorites, which is SanDisk. And we say you want to buy strong demand. If you have demand at 10, that's a momentum stock, and supply declines, that's a very good condition to buy. And you can almost always make money on those situations. Right now, SanDisk is back to a 10. So, if demand drops below below 5, you leave and you just wait to come back. So when it rises back over 5, would you buy it? Well, then you go look at the supply side. Supply is short volume, not short interest. And if supply is rising, it's just less compelling. And it's a very good principle. Stocks tend to do better when demand and supply diverge. It's the same thing as, take real estate. If you have a lot of demand for homes and a limited supply, the prices of homes tend to rise until those conditions reach a point of equilibrium. And the same thing is true in the equity market.
Mm-hmm.
And so that's the principle to apply. The beautiful thing about Market Structure Edge, by the way, you can sign up for our free daily notes. Just go to marketstructureedge.com and you can, click to get our daily views on things for free.
Awesome.
But that's what it will do. It's the demand supply balance. That's what we look at.
Okay, so let's bring in here the looming thing that everybody is, for better or for worse, being forced to consider here, which is, the software stocks and IGV and the AI disruption. We've been seeing this thing play out over the last few weeks here. Tim, do you have any lessons that you think investors should be focused on from what we've seen play out in the software names?
Well, yes, I can explain why this occurs. You might say, well, Tim, it's pretty simple. If there's a belief on the part of investors that AI could replace software inexpensively, people will quit investing in software and the stocks decline. Well, yeah,
Makes sense.
I get that. Yeah. Right. But there's a broader picture. It's part of how the market works today. And you have to think about it this way. Let's suppose you have a small number of software stocks, and we can track that. But I'm going to use Intuit here as an example.
Okay.
And then you have money that has exposure to the stocks, the underlying stocks, and then a bunch of ETFs that are focused on tech and software and market cap that will all intersect with software stocks. Then you have options trading on both the stocks and the ETFs, which compound reach. And those options have a variety of horizons. They could be weekly, monthly, quarterly. So you have a broad variety of derivatives exposure to the market. Then those stocks begin to get included in indexes like the Russell 1000 or the S&P 500. Now you have futures contracts that depend on the value of those stocks. And you put all those things together and you have a compounding effect that drives the prices up. Okay, so let me expand this out. So then what would cause that to end? Let's do a 3-year view of Intuit here. Well, let's suppose that suddenly there is a question about the impact of AI. And so passive flows to ETFs and indexes slows. And all that overlay of derivatives now is of questionable value. It's the same thing that happened to mortgage-backed securities, right? All that has to happen is for houses to stop rising in value, for all the securitized exposure in the market to have the potential to be written to zero. And the same thing happens in the equity market. All the derivatives devalue. ETFs consume their own shares and reduce the supply that's outstanding, and you have a tremendous drop in the value of the stocks. But you can see it happening on the demand side. That's what you have to be aware of.
Yeah.
You always want to look to see, is this stock spending a lot of time at 5 or higher? So long as that generally is true, you know that the sector is in good shape. And look at this is what happened. When Intuit stopped bouncing back to 10, that's your point. You know that the momentum has come out of the group, and that's when you want to cut your exposure. But that's how these things work. And when the bigger question is not why this happened to software, but what is the probability that it can happen in other parts of the market? All of the market is constructed the same way. And at some point that will happen. That to me is the big risk for investors. And you have to be aware of both risk and opportunity and realize that ETFs and options create these risks. And that's why you want to keep your eye on the demand side and know when it breaks down.
Tim, excellent stuff as always. Founder of Market Structure Edge. Folks, that was what we were looking into there. That was Market Structure Edge. Tim giving us a nice little how do you do on getting over to get some of their alerts. If you want to just give us that again, Tim, that'd be awesome.
Marketstructureedge.com. Yeah. Sign up for our daily notes. I write them and our chief market strategist writes them. But we come out every day.
Awesome, Tim. Well, thanks for joining us today. Appreciate having you on.
Good to see you, Brent. Thank you.
You
Have
too.
a good week.
All right, you too. All right, folks, we are going to wrap it up here. We were not able to get over to some of our rating changes there. That's okay. We're going to jump into the STN room in just a sec, and we're going to touch on a few of those notable rating changes. Want to just give a little heads up, folks. Get ready for tomorrow, because tomorrow on Pre-Market Prep, guess who it is? No, Stat Man. No, Stat Man. Brian Dietrich on Pre-Market Prep tomorrow, 8:35 a.m., folks. That will be fun. In STN this morning, we're going to be getting Scott Brown at 9:45 a.m. Awesome technician. I'll be chatting with Scott tomorrow. In STN, Pete Carmesino, he is over at Chaikin Analytics, working with Mark Chaikin. We'll be getting Pete on at 10 a.m., folks. Thanks for tuning in here on this Monday, folks. Hope we got you kicked off with some good trade ideas, some good news flow, and a little bit of education. Folks, have a good day. We'll see you tomorrow in Pre-Market Prep.